Hello everyone, welcome to Harvest Asset Management's monthly market report. Supply chain difficulties dragged from the COVID-19 period up to 2021, combined with the risk of macroeconomic instabilities, have accelerated inflationary pressures, as you can see. Particularly the cases of the Republic of Chad and Equatorial Guinea, which had a negative inflation at the end of 2021, which ended up with a rate of 4.1% and 4% respectively, a rate well above the community threshold. To deal with this situation, the central bank, in its role of maintaining the stability of the currency, raised by 50 basis points on March 28, 2022, its two main key policy rates, namely the 10-year interest rate from 3.5% to 4% and the marginal lending facility rate from 5.25% to 5.75%. Subsequently, as a result of the Russian-Ukrainian crisis, these inflationary pressures accelerated further, placing the level of inflation of all CEMAC countries above 3%, as you can perceive on the graph. This led to a second reaction from the central bank during its third monetary policy committee held on September 26, 2022, to raise for a second time these same key policy rates in the same proportions, namely the 10-year interest rate from 4% to 4.5% and the marginal lending facility rate from 5.75% to 6.25%. Due to the improved health of the oil sector dragged since 2021, as shown on the graph, CEMAC countries have seen their economic growth prospects improve. Through the IMF April 22 Regional Economic Outlook, we can see an upward revision of the growth forecast, particularly the cases of the Republic of Congo, Chad, and Equatorial Guinea, which were emerging from economic recession in 2021 and found themselves with a positive growth rate at the end of this period. This situation was amplified over the year by revealing two highlights during the World Economic Outlook of October 2022, as you can see. Indeed, growth forecasts have been revised downwards for Cameroon, Central African Republic, an oil importer, and the atypical case of the Equatorial Guinea that we estimate due to the drop in price of the barrel of oil during this period. Growth forecasts have been kept constant for Gabon and Chad, and an increase observed at the level of the Republic of Congo. And we believe that this is related to the good health of oil added to gas. At the last Monetary Policy Committee in December 2022, the central bank expects growth at the level of the 5 countries, but unlike Equatorial Guinea, which will be in recession for 3.5%. As for inflationary situation previously projected in 2022 at 5.5%, it is expected to decline by 70 basis points to 4.8% in 2023. It should be noted that due to the good health of the oil sector, coupled with the appreciation of the US dollar as presented earlier, the CEMAC state countries have revised upwards their budget policies through amending finance laws in relation to the higher capital expenditures. The states Cameroon, Gabon, and Congo have all increased their budget envelopes. On the other hand, the Central African Republic has revised its budget downwards by nearly 42.8 billion francs CFA. And we believe that this decline was related to the increase in the price of oil that weighed on budget forecasts. For the current 2023 financial year, all states have increased their budget envelopes. At the level of the capital market, and more precisely at the BVMAC Treasury Securities Market, we see an increase in the market debt with a peak in the fourth quarter of 2022. The market debt ratio fell by 100 basis points over the January-October period of 2022, with an accelerated decline of 50 basis points between February and March, explained by the more than proportional increase in sub-regional GDP, correlated with an increase but less than proportional in the market debt and a tendency of states to go for long-term borrowing. We believe that this upward trend will continue, and the market debt could be more than 5,400 billion by the end of January 2023. In terms of the cost of mobilization of resources in the market, we can see two striking effects at the level of the main market players. Indeed, for the case of Cameroon, we see an increase in the trend of its yield curves And unlike the case of Gabon and Congo, we see rather a decreased trend over this period. This situation for Gabon and Congo is linked to the upturn in the oil sector, which plays to the contrary in the disadvantage of Cameroon. As for the stock exchange market, CEMAC, we can see the contribution of the market has increased considerably, ranging from 1.43% to 1.88% of CEMAC's GDP, explained by an increase but less than proportional to the capitalization of the bond sector, which went from 764.55 to 964.34 billion francs CFA over this period. This is in relation to the entries of the instruments ECMR 6.25% net 2022-2029 in September in the bond sector and the shares of Banri over the same period. We expect a decline in the level of inflation that will stabilize at 5%, but at a much higher level than the beginning of 2022. We anticipate a price per barrel of oil above $88. This is due to the capping of Russian oil decided by the EU and G7 to maintain the production quota by OPEC members and the relaxation of the measures confirmed in China, which should accelerate demand and therefore the price will follow. At the CEMAC level, we anticipate an increase in the market contribution to more than 2.25% of sub-regional GDP due to the inflows of BDAC 778 billion, Gabon 175 billion and Chad 100 billion, and the SCG Ray shares 5 billion on the equity segment of the market. With this, we thank you for your kind attention and hope to see you next month for the second market review.